Boom. We're live, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. It's good to be back, doing some work out here in the jungle. Beautiful rainy day. We're going to be taking a look at Bitcoin, Avalanche, and Solana, some of our favorites. I want to do a little bit of a market overview for the traditional markets at the end of this, as our market melt-up theory still holding strong. Always like to see constant confirmations of the thesis as we move forward. It's never easy to remain patient. This is why you end up with so many kind of religious fanatics within the investment world. So what we're going to do here is we're actually just going to go straight to the Bitcoin chart. So bam, there you go. All you can see is Bitcoin now, no longer my pretty face. On the daily, with the candle chart, not always one of my favorites. Let's jump to area. I'm sure you guys know this, but I'm going to tell you again, we're huge fans of the Wyckoff method. The reason being is it gives us a really nice, easy way to try to understand how people are feeling about an investment. Now, how people feel about an investment is also how good that investment is. This is what's known as a fundamental. The technicals are showing us a much less tangible aspect of human psychology around the interpretation of value. So that's speculation. Almost all value is created from speculation. That's why, again, fundamentals are so important to understand. And even though we have really strong technicals, as we'd seen with 1inch is now above the box. It's made nice gains so far. The fundamental underlying value proposition of a 1inch or something is drastically different than that of a Solana or an Avalanche. So right now, Bitcoin is moving very nicely through its SOS, LPS, and SOS, and we're moving into what I believe is one of the last LPS phases of this trading range before we go on what's going to be a fairly noticeable leg up. This was the face melting part of the market I talked about, and we've seen that already in other areas. Solana and Avalanche are great examples of this. Everyone got really worried back in May when Bitcoin was down around 28 grand. We remained bullish, although there was a potential for a deeper spring, because these are very illiquid markets. Sorry, not illiquid. Somewhat, but it's the wrong way to look at it. These are very volatile markets because of the liquidity. So it's not that Bitcoin is illiquid. It is you can move an enormous amount of money in and out of it, but as we've seen in the past, you'll have single exchanges from fat finger cells that have wicks that go down all the way to the bottom because there's just no centralized trading position. So you get these market volatility spikes that come from that illiquidity. So it's very probable that we see maybe a $58,000 Bitcoin for this final kind of trading range before moving up quite a bit higher. I think we're going to probably rip to around 80 to 95,000 quite quickly on the next reaccumulation pattern, and then I think that's going to bring us into a blow off top. Now, a lot of people are talking about a much bigger market cycle into the $200,000 or $300,000 Bitcoin. One of the things that I've noticed is that speculation decreases in volatility over time as more people become aware of it. The fundamentals become clearer. Right now, it doesn't mean that there's not more room for upside. It just means that that room for upside grows at a diminished pace. So Amazon, had you invested in the seed stage of Amazon versus buying Amazon at 2001 or 2012 or 2018, you're getting a much different view on the potential for how much further it could grow. Technology is basically what we would say infinitely scalable, but there's only so many people, there's only so much connection, and there's really not an infinite scalability to technology. There's just only what's available within the general market, much higher than a physical location, which is all you had access to is the demographics of those around you. So something like Bitcoin having, again, like what feels like infinite scalability through time decreases in volatility as speculation and the fundamentals become clearer to everybody. You have more market participants and the volatility decreases. So I suspect that 140,000 is actually extraordinarily high price for Bitcoin moving forward. Now, one of the fun things here is that we have to also want to take a look at the larger potential trading range that's taking place right now. So we've looked at this before. So this is what's known as scale invariance. So for those of you that don't know, I'm a big fan of studying math and science. It has been that way my entire life. Could be that I just like studying and researching. I like to find out if things are verifiably true or at least hold some weight and water. And this trading range idea of scalability or scale invariance is the easiest way to look at it, is that even though the trading ranges we're watching right here are the ones that have been the most important for each of these particular moves of the SOS and the LPS, there's actually a larger trading range that's taking place right now where we had our primary support followed by a buying climax. And now we could actually see a larger pattern emerge here for a bigger trading range. Now, we actually have seen this multiple times. So I'm going to delete this so it's back to where we were charting for this much smaller trading range. And I'm actually going to open up the Bitcoin chart. Actually, let's go back here. We'll go down to this one. We're going to want to go to the month, 1 week, so we can see this impressive amount of data. There we go. There are multiple great examples of this scale invariant function within our thesis that we've already drawn and already moved through. So for those of you that have been following us since, let's say, March 2020, this moment right here, this was the defined spring, the start of the pandemic. This was the most amount of fear. This was the moment when you should be buying when there's blood in the streets. And if you do that, you'll be a happy investor, because this is when things are extraordinarily undervalued. This has always been the case. There are age-old adages around buying when there's blood in the streets for this exact moment, because somewhere along the way, people get super scared and they involuntarily speculate to the downside, right? We've seen this in multiple crashes, in multiple countries, and cross cultures, cross borders. Fear, when it runs rampant in the mind of the humans, will destroy the value, or at least the speculative value, of the things that they are holding. And what becomes valuable appears more intangible. So these horizontal trading ranges represent that intangible speculation of what's valuable to people throughout time. So this trading range is what we were watching here. It worked. Sorry, I want to draw over this. It played out beautifully. We had our nice spring, our selling climax, our automatic rally, our secondary test, our spring, our test, our LPS, and then boom, a massive SOS and LPS, which was really, really exciting to see. The fun part, though, is that, again, the scale invariant nature of a trading range is that this is actually a giant accumulation range. And we'll use the S&P for further function, but you have a trading range within inside a trading range. It's like a Rick and Morty, or what was that Leonardo DiCaprio movie called? Inception. It's like a dream within a dream. It's a trading range within a trading range. And this is not the first time this has happened. It's not the last time it's happened. It has happened to every single asset. If you look at the S&P 500 here right now, boom, huge trading range into a new bull market effectively. So back here with Bitcoin, this trading range down at the bottom here was actually a very beautiful entry point, and it was technically the trading range for just the spring alone. So on the 1 week here, you had a trading range at the bottom of the trading range, right? So this would have been your SOS, your LPS, your SOS, your LPS, and then boom, the full bull market. But again, at a higher time function, you have another horizontal trading range. Now, this is all done on linear time frames for a reason. Humans don't think in logarithmics. They can barely even think in exponentials, which is basically what a logarithmic chart is. So if we know that humans are basically incapable of thinking in asymmetric or logarithmic functions, what we're doing here is we're actually using a linear time frame for a very important reason. Now, I do like charting on the log chart for something different, but right now what we're looking at is the basis of the range of human emotion through an investment based off the fundamentals of that investment, which is part of the speculation, and that asset as a whole. So once we started to move out of this smaller trading range, we created a bigger trading range, and throughout the rest of the history of Bitcoin, it's done the exact same thing. It's created a small trading range that usually represents a very close function to its bottom, with the selling climax of this previous accumulation cycle, which is what I don't think people should ever look at it as a bear market cycle anymore. if you are a very good investor, you know that the bear market is the most exciting time of all markets, because it means you have time to accumulate when there's not a lot of noise and when there's not a lot of fanboy nonsense going on in the market, in the community. So it gives you a much easier route to the job that you want to be doing, which is actually sustainably accumulating more assets. Once the price is in discovery mode, accumulating more feels illogical. We're like, oh my God, what's the price at? And that's why this is so important, is to understand that because these things repeat, they're almost like a meta function of the universe itself. Like, you can't escape the fact that we're flying behind a ball of ice and rock through interstellar space. And there's a lot of stuff going on that kind of precede this moment to be the way that it is. So Bitcoin is going to probably go to around $140,000. The likelihood of the volatility decreasing we've seen through every single market cycle up to date. And because of that, the next step here is actually likely another subtle reaccumulation area between around, I think, 90 to 80 to 90, let's say 70 to 85,000. Bitcoin's hyper volatile, so just even if I get within a range of that, I feel like we've done a good job. I think you're going to see another accumulation box that will push us in through. Well, it might take an extended time to get there, actually, too. We'll see. It might not. It could be very short. I actually think we'll be at around $100,000 by December. So let's say it's a short accumulation box like this, and has us upwards and leaving the box out of 90 towards 100 and something by November, December. So it'd be bang, 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 bang. And we've seen this very similar. So let's go into some of the next assets to see what this speed, volatility, and fundamentals look like from a different asset level. Solana, big fans of Solana. I like many aspects about this from a fundamental level. If you've been following along with us since early 2020, when we've been talking about first off, talking about why we thought, well, let's start always with fundamentals from now on, because I made a mistake with 1inch by starting with technicals. Solana from day one had really strong fundamentals, at least in my opinion. It's one of the reasons why we also made investments in BNB, is they had a really strong community. Solana, the Alameda Research family, that's what I'm going to call them for now, they're a really strong community build. So even in the early days, around $5 to $12, this was a clear winner. Nice widening megaphone pattern, nice reaccumulation, bam. And then again, look at the size and the difference between each of these trading ranges. Like, this is a nice reaccumulation range here, and it was kept so tight. They wanted to get as much of this stuff off the open market without pushing the price up. And then very, very quickly afterwards, we shot from $17 up to 50. Bam. And look at the volatility of this secondary trading range that took place here. Much, much, much larger, around 50%, right? Within side of the trading range, as in comparison with like the 10, this super tight, 20% trading range we had prior. So almost everyone is usually concerned about where the upside end is, right? I'm much less concerned with how high Solana is going to go as in comparison with how low it started and how low it could go, more than how high. There's a lot of room for upside. There's in fact an infinite room for upside. So what we want to do is always make sure we're making good investments, and everyone gets caught up in the price. So what do? Well, you just ignore the price and you buy good assets. Someone asked in the chat earlier today, is Avalanche or Solana too high to make it like an investment in? If you play this thesis out, this should take you years. A good thematic investment will withstand the test of time and should be durable and rugged enough or robust enough to do so as well. And in the event that you find those things, any moment you can invest in them is a good time to invest in them. Right? If we go back, we look at that length of Bitcoin's time frame. You go back and you see all these tweets of people like, "Oh my God, Bitcoin is at I'm so glad I sold it when it was at $8 or when it was at $200 because it's back at $80. Like, what a scam!" Or like, "Oh my God, I'm so." But this is again why so many people become religious around an investment, is because that's where the things like diamond hands come from. Is you have to have some serious conviction within your fundamental understanding about what Bitcoin is to hold on for this fucking crazy ride of asymmetric upside that it's going through. And also understand that it's likely going to continue to go through that asymmetric upside growth to where what was once the previous all-time highs don't even show up on the screen. So back to Solana, we see this massive room for massive move to the upside. At the very early onset, the fundamentals, the technicals, all lined up, saying we were going to get a bull market. We sent this out our private newsletter. Solana was still only like $46 and another giant move up. I suspect we're actually still going to have further move up to the upside. It is in very strong hands right now. You can see it by the way the market is developed. And Avalanche looks like it's doing something very similar. Now, Avalanche's launch versus Solana's launch was in a much more public-facing arena. So even though you could get in Solana early as a kind of average investor, it hit the public market quite quickly. And because of that, it was accumulated by stronger hands from the get-go, at least on its public-facing side. Avalanche, on the other hand, ended up in the hands of a much larger retail base early on. I think this is why you see such a dramatic sweep to the downside here, which is just this is just weak hands that were leaving the market. Big funds who have been accumulating now, like Three Arrows Capital, and they understand the long-term game, that any price movement you're getting in here is good, and they probably made huge investments. Three Arrows Capital I actually think showed up late. I think that this was a good part of where this price evaluation came from, was a lot of these bigger funds recognizing, holy crap, Avalanche has some serious technology here. And again, Solana and Avalanche are focusing on the same kind of layer one area, although I do think that in the end, through all of this, you're going to have a clear winner over the other, or at least in terms of the niche. I don't think that you're going to end up with only one layer one. I think that this still becomes a larger conversation around choice and what the community likes, builds, and where their product is most effective. Bitcoin, in my mind, went public this year as a type of sovereign digital money. I don't think it'll be the only one. It'll probably be the one that's most widely accepted for the largest transactions. But again, the fun part about voluntary money is if you want to use a Litecoin or a Dogecoin, you should be able to, because that's the fun of all this is hey, we openly and freely accept everybody's view on what's valuable. And that's a fantastic concept to move by in the world of money, especially with how many problems we've had in the previous monetary system where it is like just the US dollar. Can't have just one. It's better to have choice. So between Avalanche and Solana, both of these layer ones have fundamental specs that really line them up to be powerful in their niche, within a niche, I think. Now, I don't know. I'm not a super intelligent tech person, so I'm just creating some conjecture based off my intuition here. But Avalanche now looks like it's in strong hands. So we had some retail washout because of the early private launch. Again, people that had this their first time making $1 million or something, and they're like, "Oh my God, I'm gonna fucking sell, sell." Nonetheless, here, this big accumulation by Three Arrows Capital, people that already have billions of dollars, this asset is now in strong hands. And we can actually clearly see this by a rising price, falling supply signature. We had a massive amount of accumulation move into this area to begin with. And this looks like the new base for Avalanche just took place around $48 to $52. Now that we're moving above the VPVR, I suspect we're going to get a nice run to probably around 95, test back at around 78, 77, 76, really to see how strong of a hands we are now in for this market, and Avalanche could go much higher. The fundamentals between Avalanche and Solana as layer ones I think are extraordinary. Again, I'm a layman when it comes to technology, so I'm just making stuff up based off what the wind says. And then lastly with Ethereum here, another one of these layer one with amazing fundamentals, still part of my investment thesis. Again, I think we are early enough to say that these are all three within what we would consider a venture capital play, and which means they could all fail. Bitcoin has now left that area. I don't think Bitcoin could fundamentally fail, and we're probably going to have it for the next decade or longer. So hats off to Bitcoin too, I guess, by the way. Round of applause to Bitcoin for being something awesome and withstanding the test of time. These three, though, these layer one solutions, there's a lot that can be done in terms of having a sound money and the contract layers to work with those. So a huge, huge potential, not just in the DeFi or the NFT or the video game, but in the way we share contractual data or we communicate value across any platform or chain or between any individual. So because of this, we're probably going to see significant highs for Ethereum still. We look at our scale invariant function. We can make an easy assessment that we're probably going to see around 6 to 8 grand. And this is what we've been saying since 2020. Now, I felt a little ridiculous saying that when we were back at $970 Ethereum, but today, especially after we hit 1600, it looked like, again, if we broke through this bottom trading range here and fell much further, like if we didn't bounce at 1400 here, and we could have easily fallen all the way back down to $700 for Ethereum. Ethereum is now installed or upgraded features that make it a bit more functional. It feels like a Honda, where they're like, yeah, let's add a spoiler and an intercooler and a turbo, and we're going to put rims on it, and then we're going to lower it, and we're going to put better tires on it. And they're making it a better vehicle, but Avalanche and Solana just feel like they were better vehicles for the track to begin with. And because of that, I think that they're better vehicles given certain track situations. Now, Ethereum, on the other hand, fucking Honda is amazing, or so is Toyota. Like, I love Toyota trucks. So maybe we could, instead of calling it a Honda, these are very robust, very powerful, very reliable systems that will be around for a long time. So even though I'm very bullish on Avalanche and Solana in terms of what layer one can produce, there's nothing wrong with tractors, right? There are so many types of vehicles we have on this planet. It's not like, oh yeah, just one vehicle to rule them all. Like, it's not how this shit works. The market doesn't want just one vehicle. The market likes choice. The market has always appreciated choice. And this is what we were kind of leading to in Bitcoin, is that the market actually likes choice. Now, it does tend towards one, money or language, multitudes of things tend towards one. But at the end of the day, you still end up with a multitude of choices. Okay. I think Ethereum is going to go a lot higher. 6,800 to 8,200 is my rough guess. We've stood by that since last year. Nothing new to really update there. Aside from, again, in this next bear market, we are going to really discover the fundamental underlying value of these assets without kind of, I guess, the noise of the market speculation getting in the way from assessing their next step of what's valuable. Okay, so lastly here, the S&P 500, we'll just go over here. S&P 500 has moved into new highs, so we'll look at the shorter frame here. I've mentioned this so many times, it feels like a broken clock, but because of the rampant money printing, and if you do your homework, knowing that this has happened throughout centuries, it's not like, oh, this government is doing it wrong. No, all of the governments have all done it wrong through like thousands of years of data. The currencies become inflated and tyranny ensues, and then economies and civilizations collapse. It's happened like this so many times. It's nothing new. This is a repetitive process. So because we know that there's a repetitive process, we can actually start to rely on this. They're going to print dollars. And this is the reason why we just only want to accumulate assets and never sell them, is because it's actually very difficult to catch up to them when they're selling the dollar, or basically destroying the dollar's price at such a ridiculous rate. It's very hard to outpace that. So the best way to do it is to be in valuable assets. So we're going to compare here the M2 monetary supply. This basically shows the in orange now, and we'll drop the S&P 500. So right now on the screen, this is the S&P 500 versus the monetary supply. And this is the kind of base of our underlying thesis. And this is one of the things that I've stood by since 2016. In 2016, when we hit this area, I thought we were going to collapse. I thought that was it. I was like, this is nonsense. We're way too high. I didn't yet know enough about trading ranges, and I did not yet enough understand what happens when they just print dollars. In all these civilizations, when you print dollars, you get to hyperinflation. Well, this is actually what hyperinflation starts to look like. Hyperinflation looks like every asset across the board going up, and going up for quite some time. In the early Germany, Weimar Republic, we have a lot of the signs and signals that they had in terms of the years ahead of the hyperinflationary blowout top. And it's that you end up with overnight millionaires in multiple places that really deserve no success, generally speaking. Can't think of how many places we could find that right now. Assets in every area of life are increasing. Yep, that too. Across the globe as well, by the way. I live in Costa Rica, and I'm watching our currency be debased here quite quickly. It was 500 colones to every US dollar just 2 years ago. It's like 630 now. That's an incredible rate of inflation for the average individual to go through just on a monetary supply, let alone that the prices of everything else are also increasing. So that's when wages also start to increase, like in early Weimar Republic Germany, like, oh, we need to increase the wages because people need more money to buy stuff. This is exactly what hyperinflation has looked like before. So don't think that we're different. Don't think that we are smarter than our ancestors, because we are not. We make the same mistakes over and over and over again. For instance, we have constantly persecuted the people that have been right because they were right early and ahead of everyone else that disagreed with them in scientific fields and mathematics and everything. We persecute the people that are right because they're right early. And then eventually like, oh, hey, they're right. So you should keep an eye on those things. Right now, this is a market melt up. We're going to continue a market melt up because assets are actually worth something and dollars are not. And there's going to be some cock in this chat who's like, oh, just give me your dollars then. Look, when people are hallucinating value, like you are doing, everyone will agree on the hallucination of the value. But the fundamental value remains the same. And this is what the fundamental conversation is saying. They're going to constantly inflate and destroy the value of the currency. That's what every government throughout the last thousands of years have done. Don't expect them to change today. And because of that, we're going to witness a beautiful, ridiculous increase in all asset prices. From 2012 today, the S&P 500 has gone up 200%. That is extraordinary. And here's the 2001 panic of the collapse of the Twin Towers. Here's the 2008 financial collapse from over speculation in the housing market. And look at that. We are an order of magnitude higher, 5x higher, just under an order of magnitude, I guess, than that previous low. So when we know that they're just printing dollars, every asset you should be accumulating. Now, we happen to have some favorites like Ethereum and Avalanche, Solana, Bitcoin, and the rest of the family of venture capital plays that we're interested in. But our underlying thesis comes from the fact, again, that governments throughout time have destroyed currencies through inflation, and we have seen this story of inflation in every asset class happen throughout the generations. Do not miss wealth transfers. They are fun if you're on the right side of the table. They're horrendous if you're on the wrong side of the table. You are participating in history right now. I would suggest enjoying it. Anyways, we'll leave it at that. Thank you guys all for joining us today with TRR King Bear. Hope you enjoyed today's episode. Just a long-term, I try to provide you guys with just only signal. You know, I know YouTube rewards like videos every day, and oh my God, this is happening, and this thing is happening, and look, they did this, and this is going to do this, and this. I don't like to do that. It's not part of my character. It's not who I am. I live out in the jungle with nature. I walk around barefoot, picking flowers from my garden and eating food from in the dirt that I planted years ago. That's what I find valuable. Yes, everyone likes making money. We all like the growth of the asymmetric upside, but on a day-over-day basis, recognizing and being grateful for how miraculous this all is really leads to a rich life. And you're given that opportunity every step of the way. And if you are truly understanding the mantras that we've repeated here. Heads, I win. Tails, I only lose a little. The underlying thesis of the degradation of dollars throughout time, or at least the recorded time that we know of. You are now on the pathway to success. And it is actually easier than you think. It just requires you to show up, be consistent, and have such a robust mindset to ignore all the people telling you you're wrong, because that's what they told us about Bitcoin at 90 bucks, at 200 bucks. And now finally everyone gets it. So that if you're right and you're right early, everyone's going to tell you wrong. And that's why there's Link Marines and XRP Army. That's why there's all sorts of religious fanatic maximalism around any investment, is because if you're right and you're right early, you got to have some serious conviction. And one of the best ways to practice conviction is by just sitting down and enjoying life. And when you do that, you can make astronomical gains with doing very little work. So this is a thesis that anybody can repeat. So if you understand this, you are on your way to making millions and millions of dollars, but it doesn't happen overnight. It's about patient consistency. And just while I've said that too, I should say, none of this is financial advice. This is just what I've been able to, all the mistakes I've made, and then the things that I've found that work really well, and how to just repeat that simple process. Anyways, stay with the Arcane Bear. We'll see you guys on the next episode. Thank you all for joining us. I believe we've got an intro, outro video here.